Hello everyone, David from Mortgage Choice. It is Tuesday the 6th of Feb and the Reserve Bank for the first time this year has made their big announcement on the cash rate and they've decided to keep the rates on hold. Widely predicted that they would keep rates on hold this month, and it's further support that we're at the top of the rate cycle and that the next move is likely going to be interest rates coming down. Now, we're still probably 6 to 12 months away from interest rates dropping, but it does look like the next move is going to be down, which is fantastic for those of us with mortgages. It means hopefully that our interest rates won't go any higher than they already have. I thought today I would take you through a few websites that we look at when we do these videos, just to give you some context around things like inflation and the cash rate and what also influences the cash rate. So I'll start with the Reserve Bank announcement. And let me just shrink my screen down a little bit. So the Reserve Bank, every time they make an announcement, it's the first Tuesday of every month, and they post their meeting notes on their website and just make points and justifications on why they've decided to either keep rates on hold or increase or decrease. So they have made note that inflation is coming down. It does remain high at 4.1%. But that it is coming down. And I'll take you to a graph here in a second that shows you how inflation has come down over the last 12 months. They keep making this note that the outlook is still highly uncertain, and I think that's just to keep people from getting too far ahead of themselves. We don't expect that interest rates will drop this month or next month, but the expectation is that we'll start to see them coming down, and that will obviously stimulate a lot of borrowing and a lot of purchasing in the property market. Returning inflation to target is their priority. Obviously, the last 24 months of interest rate rises have been due to inflation being as high as it was, and it's obviously run its course. So the interest rate rises that we've seen, the slowing down of spending in the economy has helped bring down inflation, and so hopefully soon we'll start to see the rates drop. This is another web page from the Reserve Bank of Australia. It's the measure of consumer price inflation. And so this lovely chart here just shows the movement of inflation over the last, 50 years, 60 years. And the area that we're focused on is this area here, where we can see from 2020 a huge increase in inflation up to, 7.8% back in December of 2022 before it started to drop. If you cast your mind back to, May or June of 2022, that's when we started to see interest rates climbing. So where we're at now is the inflation sitting at 4.1%, and the expectation is that we'll continue to see that coming down. Now, if the target band is 2 to 3%, that's this purple line going across, we're not far from it. So the good news is the Reserve Bank thinks that we're on track to see inflation returning back to their target band within the next 12 months, so by the beginning of 2025. So very encouraging signs that, again, we're on the other end of the cycle. Now, the cash rate. This is showing the cash rate since 2010, and we can see that it was as high as 4.75% back in 2012, and it's currently sitting at 4.35%. And that means that the average variable rate for most mortgages on an owner-occupied loan is sitting at around the 6 to 6.25% mark. If you're any higher than that, then you're likely a little too high, and maybe we have a chat about potentially refinancing you if you haven't done so in the last 12 to 24 months. Look at potentially making a move and sharpening that rate. Or the easier thing to do is just to call your bank right now and see if they'll actually lower the rate. Now, this cash rate, we are expected to see that drop. Hopefully, by the middle of this year, we'll start to see some movement on that rate. And this is the prediction right now. So the ASIC put out an RBA tracker, and this tries to help predict where they think interest rates will go. This tracker is showing the cash rate currently at 4.35%. That's this dotted line going across the screen. And that will be down to about 4.1% in August of this year. So the market's predicting at least one rate drop by August of 2024. So good news there. Last thing I wanted to touch on was the link and the close relationship we have with the American economy. And the Federal Reserve has done very similar to what the Reserve Bank here in Australia has done over the last 24 months, and that's be very aggressive with their interest rate rises to help curb inflation. And the Federal Reserve Chairman came out at the end of January stating that they expect that rates will start to drop towards the middle to latter part of this year in America, and that they'll likely come down 2 or 3 times before the end of the calendar year. And that's fantastic news for us because we closely follow the Australian or the American economy. And if the Federal Reserve is talking about decreasing interest rates, that means that we're also considering it or likely to consider it. So yeah, very interesting times ahead. I wouldn't be surprised if we start to see rates drop by, say, June or July. And hopefully that means that all of us are on variable rates or are paying a little bit less than we have been for quite some time. Now, moving forward, we're seeing a lot more action right now for first home buyers. So if you're a first home buyer out there, someone that's considering buying their first house, please give us a ring and book in time to speak to us about one of the best government schemes that I've ever seen available, and that is the First Home Guarantee Scheme. It's a fantastic opportunity for first home buyers to come into the market with very little deposit, only 5% deposit on the purchase. And coupling that with the stamp duty waivers on any purchase up to $600,000, it means that you can get into a property for just a little over 5% of the purchase price, and that's it. In the past, you would have to put in 10, 12, 15% of the purchase price to purchase your first house, and the government's made it much easier with the federal the First Home Buyers Guarantee. So first home buyers, if you've got questions about that and you want to know how you qualify or if you qualify, please give us a call and we'll run through your options. For those with the mortgage, we're doing a lot of debt consolidations right now. So consolidating car loans and credit cards into the home loan to try and free up cash flow for those that have been affected by higher rates over the last 24 months. So if that sounds like something that you could benefit from, just a bit of a boost in cash flow, we can spread that debt over your mortgage. It's not the best financial thing that you could do because we're taking unsecured debt and spreading it out over a long time, but it will help get you through a tough time if you're having issues with interest rates. One last thing to note, we are doing a record number of car loans over the last 6 months. I think it's because the car manufacturers are starting to actually ship cars to Australia, so we're seeing a lot more in the way of sales, and that means a lot more need for finance for cars. Dealers will often make more money on financing a car than the car itself, so please give us a call if you're looking to purchase a car. We'll provide you a quote, and hopefully that quote's lower than the dealer. If not, at least you know it's competitive what you're getting from the dealer. So please use us as a second opinion if you're looking to buy a new car. All the best for the new year. Any questions, any concerns that you've got, please reach out, and yeah, we'll be in touch next month. Thank you.